Good morning, good afternoon, wherever you are. Thank you for joining us for Galileo Financial Technologies Market Research webinar on how you can expand the financial frontier. Next slide. Joining us today is Seth McGuire, Chief Revenue Officer for Galileo, and Sherri Haymond, Executive Vice President of Digital Partnerships at Mastercard. Many thanks to Sherri for providing your valuable insights and Mastercard perspective on today's webinar and Galileo's research. We're incredibly excited to share this rich consumer data and behavior, which provides valuable insights for everyone across the financial ecosystem. The research really looks at how consumers interact with their financial providers across different age groups, which gives us a deeper understanding of how to align our offerings with what customers want. Through this research, we'll cover three key trends. The financial services market is expanding for everyone, which presents an enormous opportunity for both financial and non-financial companies. How and where consumers bank is changing. Where people bank isn't always where they keep their money. What motivates consumers is a moving target. Actual consumer behavior doesn't always reflect their intent or their values. Our research included 4 categories: traditional banks with at least one physical location, digital-only banks that can be accessed only through a computer or mobile app, such as SoFi Money, Chime, Varo Bank, prepaid accounts such as Green Dot or NetSpend, standalone digital accounts such as Venmo or PayPal. We also looked at the data and the research by the 4 core generations. Next slide. To provide context for the research, I'm going to provide a quick snapshot of the market opportunity. Today, the financial ecosystem is bigger than ever and growing rapidly. Today, it's valued at $22.5 trillion globally and expected to grow to $29 trillion in 2025. What's driving that growth is the global fintech market, which is growing 4 times faster than the global financial services market. What is a fintech? A fintech is any company that integrates technology into their financial services offering. And this could be any company, financial or non-financial. But the ecosystem is fragmented, which means there's more opportunity for everyone. There are more use cases than ever before, causing consumers to use a wider range of financial service providers than ever before. A fragmented ecosystem just means there's more opportunity for everyone. Seth?
Yeah, well, thank you, Sherri, for walking us through that and kicking us off here. I think this is a great place for Sherri and I to join. And hi, Sherri, I see you there on camera now. So thanks for coming on board today. You know, this is a topic you and I have talked a lot about even before the research, which is just as traditional banks and financial services expands this market, it's no longer a zero-sum game, right? There's new use case across every sector. There's a lot more opportunity. There's a lot more open access for consumers, which is really powerful and important. So that fragmentation gives users a chance to do more with more providers. It also gives more providers a chance to serve more in different use cases. And I know that's something Mastercard thinks about a lot.
Exactly. That, you know, as the world is becoming more digital and more of these companies are, you know, that I interact with every day are kind of getting funded and, you know, coming with interesting ideas. There's just so much opportunity to create, you know, more, you know, diverse kind of applications that serve like different groups of people. Exactly. It's not a zero-sum game, as we're going to see in the research later. You know, people also, you know, don't always choose or hardly ever choose to only use one, you know, one provider. So there's a lot of opportunity to innovate and differentiate.
Yeah, absolutely. Which I think is a nice lead into the first section we're going to talk about, which has to do with that unbundling aspect. So as we dive into some of the consumer trends throughout this research, this first section talks about how financial services are being pulled apart. what types of financial providers consumers are using, where consumers are keeping their money. And then of course, we always layer on some of how that varies by generation. So, just to dive right in there, I don't think it's a surprise to anyone who certainly dialed into this call that consumers are using more financial tools than ever, right? Digital is closing the gap in a lot of cases. And what you see here, and we're going to go through each of these three distinct components, is how people are using different providers, how they're using their primary or their secondary or their later. So as a reminder, Sherri said our research focused on 4 categories: those traditional banks, the digital-only banks, prepaid accounts, and standalone digitals. And in this, we're asking the people who took the survey here how they're using them, where are they using them. You can see traditional banks here as a primary provider, still largely kind of leading the pack there, but a lot more movement towards digital on their primary side. Sherri, as we get to the secondary, this is, I think, where it becomes more interesting.
Yeah, and what we're seeing here is that kind of the digital-only providers are really emerging as a very strong secondary provider. What this shows is that, people are spending a lot of time where there's a really good consumer experience and really good value that they're getting. This also presents like great opportunity for the digital, providers. So what we're seeing, what I've been seeing, what I'm sure all of you have been seeing over the, last bit of time, is these kind of initially these digital only type providers that might start out as like single threaded, like only going after kind of, really providing one service very well. They've amassed a lot of users. And so what they're doing is expanding the services that they provide to those, to those users. It's this whole concept of the super app that we keep seeing and hearing about, in the media, and that many of my customers are doing this now, a sort of land and expand, strategy, even just within their own app and within their own customer base. It creates a lot of opportunity, as we're going to talk about a little bit later, it creates a lot of opportunity to add additional services, to once you have something good going, right? Like with a core service, to add kind of more utility to what you're already doing to really drive more usage and adoption.
Yeah, that's right. I think some of the points, again, we'll get into later, that are interesting are that unbundling of on one hand, consumers are testing and using different accounts. And even if we move to the next slide here, we'll see the provider usage as you think about the combined entities. People are using a lot of different apps or different accounts or different structures here. What I think is we tried to get to here is, instead of asking specifically about checking or savings, we just asked across the board. So how are you using these different providers? And that gets interesting because you're starting to see the trade-offs people are making, even as providers add more services, and to your point, become that super app, consumers are opting into one of those different places. And we'll see some of that in the research later. They're making different decisions about how to use that. So certainly seeing digital make a strong move here. Our research was also showing some interesting things like, 24% of consumers who use a traditional bank as their primary use that digital for secondary, but 36% of consumers using a digital bank as primary then use a traditional bank for secondary. So you're starting to see kind of where people dive in and out of those two different things and the choices they have now, right? Like there's just a lot more choices than in the past. And so consumers are acting a little bit differently when it comes to making those decisions.
Yeah, and I think that's actually the key point, Seth, that, people want to access their money how they want, when they want, from any device they want, and actually from any provider, they really want to choose the method that works for them. They want it to work, when they need it. They want it to be simple to access. So all of these things are important when thinking about how to actually, craft what you're bringing to market and craft your UX.
Yeah.
It also means that, people though aren't choosing one, thing. It's that they want choice, and they flip flop back and forth, like amongst various apps.
Yeah. Which I do myself as well, which is why the next slide was so interesting, I think, as we talked about it, which that digital adoption is growing across all age groups. And I think in common parlance, and when we're having conversations about this, there's always this focus on Gen Z or millennials as kind of the new digital paradigm. But if we're looking at this, we're seeing that surprisingly digital only banks are most used by 35 to 44-year-olds, which is my demographic. And I would say, that is a very impactful age group. There is a lot of spending power there. There's a bit less of a maybe quick adoption of things. But when you start to see movement in this age group, it really is showing some significant traction. As expected, you can see traditional banking does get more popular as a consumer's age goes up. There's a little bit more stability in kind of anything traditional there. But it is surprising me where digital is most prominent, that it's not amongst the youngest adult consumers. There is higher overall amounts of account use across ages here, and the use of multiple secondary accounts is big, as I think you're going to talk a bit about the second part of the slide. But in general, across all generations, digital adoption is increasing, and I was surprised to see that 29% adoption across 35 to 44-year-olds, which was above the younger demographics.
No, and so we also compared how provider usage varies across generations, like when looking at secondary providers. And as a primary and secondary provider, digital continues to attract more consumers, and it's very, very prevalent as a secondary financial provider. I mean, this is amongst all of the age groups.
Yeah.
And it's not necessarily one or the other. People are using, I mean, for me, what speaks to me here is that people are not just, again, using, even older generations are not just using traditional, traditional providers, like virtually everyone, my grandma, all, kinds of, different people during, the pandemic. I'm sure you've all seen, the anecdotes on TV or read stories about people of all walks of life who had never been kind of called to try digital before, were all of a sudden trying it. And now we see that trend like really continuing.
Yeah, it was really easy to test out anything digital in the last 18 months. You're like, is this going to make my life easier, safer?
It was really necessary.
Yeah, really necessary.
Right.
For sure. I think what gets interesting, we're going to look at the next slide then is well, what they're doing with those accounts, right? So what are people doing when they're trying out and testing these different accounts? And I think what's interesting to me is that, well, people are keeping their money in more places, which is great. And also it is a transition. So you could see here digital only and standalone digital actually taking a large piece of that overall share of funds pie, 35% about the digital piece of where people keep their money. So still over half of the funds being kept in traditional banks. But to me, this was a surprise, as I tend to think of a lot of more digital forward as traditionally spend accounts or potentially smaller wallets. But this was relatively significant in terms of people putting their money where their digital mouth is, I guess.
I think also as these kind of digital only accounts, they have a lot of utility, right? Often they're used for things like P2P, and things that people use every day. And the more and more, people are getting used to doing more of that, like more of sort of everything digitally, the more likely that there are going to be funds, in accounts like that. I mean, what's interesting to me is that people are then keeping them there, as opposed to transferring them out, to a more traditional account, which is an option that all of them end up adding. I mean, it's interesting. I mean, we've also helped to add utility to some of these accounts by, for example, attaching a Mastercard debit card, to them together with the partner, so that then, people could use those funds wherever Mastercard is accepted, rather than being in that closed loop environment, which I think is also playing into people keeping more funds there.
Yeah, absolutely. And especially, again, I think as we've seen this in that towards the Gen X, a little bit of a surprise there as people are embracing some of that flexibility you talked about. So, Gen X, again, kind of leading here in terms of maybe a surprising amount of share going towards digital. Obviously less surprising on Gen Z and millennial here in terms of amount being kept in digital only or standalone. But when you see 31% of their funds from Gen X in either a digital only bank or a standalone digital account, that's surprising. Millennials and Gen Z, I mean, that's nearly 3 trillion in spending power in the last year, right? And they have less than half of their funds in a traditional bank account. So that one has already kind of crossed that dividing line. Gen X, not quite there yet, but on the edge. So it's again, across all age groups, you're seeing some of this. Above the boomer generation here lagging a little bit in terms of that adoption, but still, if you're looking, I mean, that's not a small percentage for that move to have been made in that place. So I know this is something you guys have been tracking for a while with your new payments index and looking at some of the shifts here across the past few years.
We have. And, you know, I mean, here, the point we were, you know, that we think is important to make is consumers, you know, expect to be able to kind of shop and pay, and again, in multiple ways. It's the choice point, like however they want. 93% of people actually responded to a recent survey that we did, saying that, you know, that they would consider using at least one emerging payment method, you know, in the near term. I mean, things like cryptocurrency and biometrics, contactless, which isn't really emerging, but we included that anyway. You know, and QR codes, which for the US are kind of an emerging, you know, an emerging technology, you know, in the over the next year. And then 63% of people agree that they've tried a new payment method that they wouldn't have tried, you know, but for the pandemic.
Yeah.
Yeah. And so with all of this just comes an expectation that, you know, on the merchant side, you know, consumers want to be able to pay, you know, how they want. You know, at Mastercard, we're helping to provide those choices, and, you know, merchants should, I think, be ready to provide those choices as well.
Yeah, no, it's a good point. I mean, obviously Galileo on the issuing side is where we spend most of our time and focus, but this really is across the entire payments spectrum. As you're thinking about that choice, that's changing every piece of the puzzle on the way, from the acquirer, from the you know, association, all the way to the bank itself. Like, I mean, there's just a lot more moving pieces when you have multiple different means of payment, and you're giving a consumer multiple choices at that point of purchase. So what differentiates those things for them? What's leading consumers to make choices about what they use in each of those situations? I think it's gonna be really interesting to watch, is just where and how people decide to use different choices. Like, if you can pay with crypto, do you? Or is that like is that a couple times fun thing, and then you go back to USD, or is it credit versus debit? Like, when you have a plethora of choices, I mean, I couldn't say that I always use the same card out of my own wallet, right? Sometimes you just grab the first one there and you're like, well,
neither do I. And as you might imagine, doing what I do at Mastercard, I have many, many cards. It's true. I mean, from our perspective though, I mean, I think you're hitting the nail on the head that, I mean, we believe that there's not going to be one answer, right? Like, all of these things are very interesting and viable and important for different use cases and to different people in different segments and at different times. And so what we're trying to do is actually enable all of them in a way that doesn't require that much work, you know, especially on the merchant side, because that it's really difficult, right? To get, you know, to kind of get that adoption. And that's actually necessary for people to have these choices. And so we're just trying to enable all of it in a way that's easy to implement and interoperable.
Yeah. Yeah. And to that choice point, you know, I think one of the more interesting factors in people's choices that we learned is that where people bank isn't always where they keep funds, which was an interesting dichotomy to me. So 77% of consumers are using traditional banks, but only 57% of them are keeping their funds in there, right? And then 35% are keeping them in digital accounts. So one of those examples of choice. What else are they using a bank for? There's a lot of different things they could be, whether it's mortgages, whether it's, my mom uses one of our local banks at home still for a safety deposit box, right? There's a lot of things you can do with a bank, but it's potentially different than where you keep funds. So, you know, in terms of kind of closing out that section, I think looking a bit at, okay, how are different generations using different accounts? We're seeing primary, we're seeing secondary, we're seeing a lot of mix there. And that gets a bit to then a deeper dive into, well, how are people using these at a deeper level? What is happening there with that choice that we just talked about? And so I think moving along here, the first thing we were looking at was that, well, traditional and digital are both driving the same use cases, right? There isn't necessarily some huge split here in terms of how people view a digital account versus a more traditional account. They're doing a lot of the same stuff. They're paying bills, they're shopping online, they're saving, and they're depositing their wages. All the normal things that we would imagine here. It's just that they're starting to split the activity level between multiple different accounts. And I think it was very interesting here, we're seeing that this was true across all 4 of those different accounts. So if it's their primary account, if you're using a prepaid account as primary, you're doing all the same things in there that you would in a traditional bank. Digital banks were slightly more likely to be used for online purposes or scenarios you can imagine you want some flexibility or convenience. Traditional banks were a lot more likely to be used for traditional banking practices. But some of the standouts here were that, you know, standalone digital accounts were also used for a lot of things like shopping online and paying bills, but also savings. right? People using some of these standalone digital wallets as just a savings account or depositing money in there. I think that speaks to some of the certainly changing view of what savings is. Some of these have, certainly some interest rates or reduced sweeps there, but not a huge amount. You wouldn't look at that and say that this is really kind of a savings vehicle, but people are thinking of that money as often a silo and saying, well, that makes it a savings account. I think that's really interesting.
Yeah. And I think it also, people segregating kind of put things into purses. I mean, we see, a lot of my fintech partners actually create this, right? Like different buckets. People are doing this on their own.
Yep.
So it's obviously it is, I think, an important feature, even if not one we asked, survey respondents about. But it's an important feature, I think, that has really risen to the top, having that ability to compartmentalize and help consumers, split their money into different buckets and then budget and save for things and have goals. These are really important features.
Yeah. Absolutely. And then I think a comparison a bit about how they use that primary and that secondary. I know this slide is a slightly busier one, and Sherri will give us some highlights here, but you see the filled boxes and then the cross boxes. And the filled ones are primary provider, and the slash ones are secondary provider for each of these components.
Yeah, and it's a really continuation of what Seth was talking about on the prior slide. The traditional and digital accounts continue to drive the same use cases across, primary and secondary accounts. And, consumers are using their secondary accounts in many of the same ways that they use their primary accounts. I mean, to me, this just sort of speaks to the need, as, fintechs are creating, different solutions to really think about including, not necessarily at launch, but including kind of as you're getting going with your with your consumer base, including these features that people, definitely need to use, and they'll stick with you more if you provide these services, things like bill pay, for example.
Yeah, absolutely. And so slightly more activities, obviously, on the primary accounts here, but to your point, it's that same selection and choice across them. People just using it for all these components. And this, I think, hones down on that a little bit more, that consumers are just using more types of banking services for more purchasers. I mean, the average consumer right now uses accounts from 2.5 providers, right? So again, wide selection, lots of choice there. Digital first consumers, as we just saw, same type of activities as traditional banks. But the core uses for how people spend and save are no longer just those traditional accounts. It's paying bills, savings, depositing wages, online shopping across the board. So primary account use, on average, 4 different activities, and then secondary account use, 3 different activities. So people, the secondary account is actually creeping up towards the primary in terms of number of activities it's used for, which is also interesting. That's across the board, 2.5 different accounts and 7 activities spread across those on average.
Yeah, that part was surprising to me, that it really is getting to be almost equal. And that, the digital versions of the accounts are not only for the niche activities, whereas I think they maybe used to be, now people are also more comfortable like using them for kind of more core activities.
Yeah. So again, I'm just trying to keep us on track. We want to have enough time to get through all the content and answer some questions. But the last large section here we wanted to go through was what then really matters to earn and keep consumers. We're seeing this change a little bit in terms of number of accounts and uses and activities across all of them. So with the providers that you and we work with, and the fintechs that are building these new products, and banks who are switching to digital, what actually matters to them? If they're making all this selection and making these choices, how can you think about serving them well? And I think this is where you and I spend a lot of time, just as partners here, Sherri, is helping some of those fintechs figure out what are the components that make their product set unique and are going to speak to their consumers. There are some common threads here we're going to discuss, and there's some little unique areas where I think people can start to make their own decisions about, what separates us from others. So this slide's again a little busy, so we'll pause here for a minute and spend a couple moments on there. But you see on the right side, these are the key drivers of satisfaction. This is an index. Things under 100 are ones that had a lower impact on satisfaction, and those over 100 have a higher impact. And so there's the index rate for like the satisfaction. On the left side, you see a client or what consumers said were their factors when choosing a provider. So the goal here was to compare across, well, what mattered when they chose someone versus how happy they are. And I think, I mean, these top four are pretty straightforward ones that I think you would call table stakes in the past, Sherri, for us. And that's security of account and funds, privacy, certainly, lower fees and convenience. So let's spend a minute or two on those. And I think we could talk about some of the other interesting call outs. But in terms of the change across the last 5 years and consumer expectations here, I know it's an area Mastercard has spent a lot of time thinking about because of those expectations.
Yeah, I mean, what struck me, I work at Mastercard. We're a very principles-based organization, right? And any of you who have worked with us know that. So why people choose to work with us. And there are principles around, not only, they started out actually as principles for digital that have then expanded into principles that we are kind of core to everything we do at Mastercard. And those include things like security, privacy, appropriate data usage, transparency, choice. Like they're sort of the exact same things that are bubbling up to the top, as both, factors why someone's, choosing a primary provider and also key drivers of satisfaction. This is, I think these same principles, like we always advise our partners, again, usually choose us if they're aligned with these principles. But we advise our partners to kind of lean into them and make sure that they are really good at those things, because it's more like if you are not really good at one of those things, especially the security one, which we'll talk about a little bit later, all of the rest of it doesn't matter.
Yeah.
You need to be really good at these things, and then you should differentiate on top of these things.
Yeah, absolutely. And it feels like potentially there's been a narrative split in the market historically about security and privacy feeling more traditional, and not even just in fintech, but just in general, as you think about any shift in an ecosystem. Security and privacy, very traditional, lower fees and convenience, a bit more challenger. But those things are blending here. Consumers aren't splitting those as they look at those two accounts. They're saying, well, this is my expectation across any account I work with, is that you need to meet all these things. And so it is forcing, to your point, every provider, whether it's any of those four types we talked about, to try to meet those basic conditions, right? Like that's the expectation. We see that both in the high amount of factors when choosing, as well as the key drivers of satisfaction. A bit of a shift from convenience there, where maybe 91% said it was a factor here, but it popped up to a much higher level, the highest level on the satisfaction index. But security, obviously, across the top two, just on average, kind of the highest there. So certainly, to your point, like this is just now the world. Like these are the conditions you have to meet. What was interesting looking at the bottom half of the page then was, well, how do you start to differentiate? Fine, say you've got to check the box on these four things, like you start to get into some more interesting areas. And one that jumped out at you and I both, again, just being at mission-driven organizations and caring a lot about values, was people don't seem to shop on a provider's values. Like this was very low on the factor when choosing one, whereas I think we've seen a lot of market narrative around it, and it certainly matters a lot for satisfaction, but it wasn't very high on the initial factor list, which is interesting.
Yeah, I think that might have to do with education or the way the marketing message is coming out. Like I was a little, admittedly, I was just a little, I was the most, out of everything in all of this research, I was actually the most confused about this one.
Yeah, yep. That one, and then I think we'll see a little bit later a point on rewards, which boosts that again in terms of potentially narrative and customer satisfaction or intent to change. But here again, those are two big areas where I think we see a lot of conversation, we see a lot of attention, but an interesting maybe dichotomy for marketers to unpack, which is where and when in the funnel you're pitching different things. And it sounds like certainly at the top of the funnel, these four things are the biggest things you've got to hit. So to bring someone in the door, they've got to see security, privacy, fees, and convenience. And then down the funnel a bit more, as you think about satisfaction, you think about growing your footprint with them, you start to think about things like values. But it was an interesting split. I think looking at satisfaction was another interesting component, just looking comparison across those four and kind of how consumers think about traditional versus digital only and prepaid. So traditional banks had the lowest satisfaction levels in the survey we did, and digital providers generated a higher satisfaction level. I think there's a lot to unpack there. Traditional banking services here can mean a lot of different things, obviously. And there's things, and I don't know anyone who's like really happy with their mortgage, right? At a certain part of the day. So like there's satisfaction matters a lot in these places. But it was interesting that digital, both on the digital only bank as well as the standalone digital accounts, had such a high satisfaction level. And I think for the standalone digital, that is interesting because a lot of them tend to be very specific, right? It's like, here is a wallet you can spend on there, although we see people saving. So there might be an expectation component here where you're using a very straightforward, simple P2P wallet. You're saying, well, I have very set expectations. I'm not anticipating this. Versus once you start to think about a deeper banking relationship, your expectations rise and it's harder to keep that satisfaction, although digital is doing it better today.
Oh, go ahead.
Oh, no, I was gonna say, yeah, I think here we get to an interesting conversation about then that intent to switch, which will take us a little bit back to some of the conversation a few slides ago.
Yeah, so consumers definitely desire to switch to digital only banks, and that desire is, only growing. Interestingly, though, only 61% of consumers said they were likely to switch to a digital only provider. I mean, not only, actually. It's actually interesting to me that number was so high, that 61% said that they're likely. Yeah. Again, we've seen in prior slides the difference between sort of saying that you're going to do something and then actually doing something. Switching a primary provider is actually, as most people out there know, is actually pretty cumbersome. Especially switching where all of your bills are paid and things like that. Yeah. But people definitely have the desire to switch to a more digital only experience. I think, not shockingly, I think it's really wanting that really great consumer experience. People really, really want that. And obviously over the last 18 now plus months, this pandemic has shown us that, that digital is great. It makes things very accessible in times when they wouldn't otherwise be accessible, at all. And it helps you, with digital, you can do so much without being, having to go to a physical branch, for example, or, there's just, you can do almost everything digitally. And I think that also has a lot to do with why the numbers look like this right now. Because many people have tried it and have realized, or maybe I don't really need, a huge branch network in order to, live my financial life.
Yeah, absolutely. And looking at Gen X again, I'm just very focused on myself here, so I'll apologize. But I think it was interesting to me to see that we saw that spike in kind of adoption of the primary before. Maybe for all those reasons you talked about, you got some of the early adopters there. So it's less of a drive here, certainly than millennials and Gen Z. It's still as high at 55%, to your point, surprising, but you've already captured a number of them primary. There's still a lot of room left to run here on Gen Z and millennial. There's just a lot more interest in making that switch soon. And so it's a question, well, what are the decision points you can drive people to? What's the choice you present them with that would have them switch there? But it is valuable to everyone, right?
Yeah, and I think there's something instructive, that we had chatted about when we were preparing for this, that, people in sort of our cohort, we actually got a taste of what digital only was like way before the pandemic. Most people I know, use some sort of digital investment platform, trading account. There was this whole sort of rise of that being available, when we were in our early working 20s kind of age. And I think a lot of people got used to kind of not, I don't really know anybody who actually kind of calls a broker to execute a trade anymore, on a regular basis. And, people they switch jobs, they have an IRA, they move it into this digital only world. And I think it's just interesting. I feel like it's interesting that that's not spoken about more, but that perhaps primed us for this time. It'll be interesting to see kind of which services pop. I mean, P2P has obviously been one for millennials. And I'm wondering what it could be. Crypto is going to be for sort of, Gen Z, they're just sort of starting out in that digital space. We've been sort of led to this world.
Right. No, it's a great point. I mean, when you and I talked, I was saying Charles Schwab was my first broker, right? And I never went into a Charles Schwab. I've never been to a branch. And then they came out with no ATM fees, right? You started to see a lot of that same movement in some of that place. It's interesting in our industry, we tend to segment these things and say digital or traditional. But from a consumer standpoint, you're just thinking about what you're actually given, right? And it's back to the point. It's such you're not like, hey, I'm bucketing this in my head into a digital provider. You're saying, is this convenient for me? Is it low fee for me? Can I get access when and where I want, right? So it's the outcomes you're looking for, not the classification. And if we look quickly, well, it existed for a while. And that's where it was interesting to look at who it's valuable for, just given income levels. I think, this is an area that I know Mastercard has a lot invested in terms of thinking across all demographics and all components of this to try to drive, ease and accessibility to a lot of different client base. So it was interesting to see the splits here.
Yeah, for sure. So I think there's a lot of reasons like why, more affluent, consumers would be sort of wanting, wanting these options and find it valuable to switch. We think it's super important, and we're extremely invested in helping the digital economy be accessible to everyone. We work with a lot of fintechs on creating, this access. Again, it's a big reason why a lot of my partners choose to work with Mastercard, kind of because of our mission alignment, in this regard. And I think with with more education, with better products that are kind of geared toward people who might need help getting into that financial mainstream, for even just prepaid cards, the fact that you can kind of get one without having to prove your identity. That solves kind of a whole problem for, for a whole set of people that would want access, but just because of, because of their status, and then regulation, or, before kind of prepaid, even like that was a problem.
Yep. Yeah. And so part of that education then, to your point, comes to like, what is the intent to switch? What are the things people are thinking about, and how do you make those more prevalent? And this obviously is a place Galileo cares a ton about. We build digital banks. That's what we help organizations do in digital payment systems. But I thought it was interesting to look at this in comparison to the reasons people made decisions earlier, as you think about consumers. And you see certainly, okay, a majority of consumers are motivated to switch, right? You see that clearly across the board. A lot of Gen X, Gen Z, and millennials are saying, hey, we really want to drive forward and make some of these switches. A lot of them did in the past year. A solid amount did, but a lot of those who said they had that same intent didn't. But they're looking again at it this year. And the things they're looking at, we start to get into certainly lower fees and security and convenience we all saw before. But here's where we see rewards and points pop up, right? It wasn't in that satisfaction before. Values isn't in here. So there is, again, this shift in terms of consumer decision points along the way. And I think given the plethora of choice, you really have to make an overall pitch across the board, not just on those 4 top points that we identified as the satisfaction index, but on all the things underneath it, like rewards, like values, like ATM fees. There's a long list of things you need to execute on.
Yeah, no, that's right. On the rewards point in particular, I think this also is getting at something, I think, bigger than rewards, and it's actually getting at, those are usually available with credit, right? And so what we've been seeing, there's just a lot, finally, after all these years, there's a big interest, from my fintech partners and from the market in providing kind of different kinds of credit experiences, like different kinds of credit value propositions. We're seeing a lot of interest in launching kind of vertical specific programs with, again, vertical specific rewards programs. Like we're doing a lot of work on creating, making that scalable, for our partners to be able to spin up rewards programs, pretty easily. We have a platform, we bought a company a few years ago, Session M, that's a leader in the space. And, now we're making that available in kind of a one-to-many way, so that it's much easier for our fintech partners to then, to kind of create these vertical specific, experiences that are tailored to different groups, which is where I think, we're seeing some programs start to, really pop as having a bright future, because they kind of got that right.
Yeah, absolutely. And that's an area we're investing a lot in with our partners too, because your point, when you're making all this choice as a consumer, then you're saying, well, I want to have a place to bring that back together. And rewards is a very natural element for that. So there's a lot that can be done there to help people make those decisions to get rewarded along every step of the way, no matter how they're spending that money. Well, maybe for a quick summary here, want to wrap up again some of what we talked about and then leave some room for questions. But I think very clear to all of us, digital is table stakes here, right? Like 61% of consumers are likely to switch to a digital-only provider. Digital is leading satisfaction, right? 79% of consumers satisfied with their digital platform. And the good news here is that, Sherri, this is what you and I do, like everyone can deliver on digital. This is here, this is available, like all the infrastructure and the technology and the ability to do it is there. the differentiation and the decisions being made along that way, I think, are where it gets really interesting for the companies we work with, which are, well, what are the ways we want to deliver on that satisfaction? What are the specific components that we care about? What are the demographics we're targeting, and how do they potentially see those things differently? And how do we still win as providers while enabling consumers with that choice to use a lot of different offerings? Oops, sorry.
Sorry. Okay. I
Oh, you're good. I think what we were just covering here is that consumers, like we said, are using more accounts than ever before, but for a lot of different activities. So there's, that same diversity within provider choice. They have a lot of that. They're applying that diversity when it comes to actual execution or use of those accounts.
Yeah, and that's because the fintechs that are coming up with these accounts, or as we spoke about earlier, are adding the key services that people need to use every day. They're expanding their offering to include these services, and making it more likely that people who are already on their platform are going to use them for more interactions.
Yeah, absolutely. So I wanted to queue up a little bit of, we have another webinar Sherri Chin will talk about a little bit, but coming up soon, which kind of starts to get to that next question at a deeper level. We touched on it lightly here as we talked about the overall, but this is, well, what is causing consumers to choose or leave it? And we have some additional research we're going to unlock in that next session that we're excited about. But first, we're going to open up for some questions here. And I want to say thank you, Sherri, for all the time you've spent on this with us. We've enjoyed digging into the research with you guys and learning from you and all the research you've done. So thanks for being willing to come on this conversation and journey with us. And let's see what people are asking.
Thank you, Sherri and Seth, for that great overview of our research. Really interesting. We have a couple of questions here. The first one, and I think, Seth, you can take this. Based on the data that we're seeing, what do we think next year will look like? Will digital growth rates continue at the rate we've seen, or slow down and level off?
Yeah. Well, I mean, I don't obviously have a crystal ball, but I would say just from the partnerships we have and the momentum we see in the market, I do think digital adoption is going to increase, across the next year. And as Sherri Haymond was saying a bit ago, a lot of that, some of that initial inertia to switch was maybe overcome during COVID, where people are like, well, I need to do this now. I need to make something easier. I do think that set people on a path where there's a lot more exploration. And, again, this is more anecdotal than data driven, but I'd say even in my own life, the number of accounts we use and we've seen friends use, and, the college kid babysitters we use, like the changes and shifts in kind of how money is moving, and the ease and expectation of consumers for how fast and simple that should be is only continuing to arise, right? So at this point, you have consumer expectations that are saying, well, I've gone out and I've experimented with a bunch of stuff. I've tried new accounts. I've switched to this. I've added this. And oh, that's getting easier. Now I have higher expectations. So they're going to continue to push the bar. And I think that drags others behind you, because now it's, you're trying to pay at the supermarket, you're trying to pay your babysitter, and there's different options available. And eventually you're going to test those out and try them out. And I just see, I don't think we're at a point where that reverts. I think what gets more interesting is the interplay between those and the more seamless nature of it. How do you make digital kind of an entire connected and mesh network where all this works seamlessly and people start to kind of create new ideas and expectations for their own providers. But yeah, my point of view is that this isn't going back, right? I think it's going to accelerate.
Thank you, Seth.
I agree, by the way, Sherri. The other thing that, in addition to kind of the consumer behavior continuing, and I agree with what Seth said, just another angle here is that the funding that we're seeing, like from the VC, world kind of pour into digital, it continues to be like, each month is like I've never seen anything like it before. It continues to be a very hot area for investment, which is great, because kind of money, the smart money is going to the smart, founders with the interesting ideas who are creative, and they're launching kind of new products or adding to existing, programs, really rich and interesting and innovative features, which is then, on the kind of innovation side, it's keeping everything interesting. And then it's, again, spurring some of that behavior that Seth was alluding to before.
Yeah. Absolutely. That's a great point in the funding. And it's so true. I mean, every week has those announcements. I will say these slides are available to use in your pitch deck for funding as long as we get a small trade of equity. Reach out to us and we'll see if we can help you out as you're raising.
So given that, Sherri, what do you think is the big takeaway for banks? Like, obviously, we know that digital has been gaining an adoption and usage. What should traditional banks be doing to keep up?
They should be getting more digital. That's something that we help them with all the time. I mean, well, part of it is getting more digital, like making sure that, that your user experience is great, that you have, that you're offering, to the extent you're comfortable with it, like some of the kind of more new innovative, features that some of my digital partners have added, not just stuff like P2P, but, we're seeing a real rise in the kind of the desire to use installment credit, right? So buy now, pay later and other similar options like that, kind of integrated trading capabilities, potentially, eventually, being also able to buy, sell, hold crypto. I mean, all of these things are things that we're going to help our banks, do. The other thing that, certain of our banks are doing well, and I think could be additive in general, is to partner with fintechs. You don't have to do all of this alone. I mean, we're happy to help, and of course, but there's also ways to partner with non-traditional players, in ways that are accretive to both the traditional, bank and the fintech. And we're starting to see more and more of this, and I think it's a good thing.
Great. Digital is great, but what about security issues? How do we protect our data?
That's just a toss-up, jump ball for whoever wants it, Sherri?
Yeah.
Okay. Well, Sherri, I mean, I'm happy to give an opinion, but also happy to let you go.
Yeah, I mean, you have to, well, we ensure that kind of all the programs we work with, I mean, we certify every aspect of every partner up and down the line, from a processor like Galileo to, end user fintechs, to the way that you make a digital, you take a card and make it into a token and then stick that into a digital environment in the merchant, like sort of environment, or onto a phone. There's lots of very great, there's lots of great specifications that, that you have to comply with and get certified to, and all of that stuff. I mean, there's also, really great solutions out there to help protect, not only data, I mean, all of it, like data, the transactions, all of the personal identifiable information and not. We have many of these services. Like we've bought many companies over the past, few years in the cyber and intelligence, arena to help our partners better protect, their data. Like, we encourage also everyone on the merchant side in digital to store everything in a tokenized format. Like, we don't think that data at rest should be stored in the clear at all. And so, we encourage all of these best practices. In many instances, we require them. But I would advise everyone to, definitely get smart on all that's available, like in this space. I mean, we can help you. I know Galileo can also help, as you're planning these things. It's really important. There's a lot of resources out there, though, that can help get you up to speed and can kind of give you all the choices that are available.
Yeah, no, absolutely. I think those are all great points, Sherri. And what was interesting to me, coming from more of a, Silicon Valley social tech background before this, was, the security issues. There's a lot of trust inherent in traditional providers. There's also a lot of inertia there, where there are very old systems. And I think one of the interesting things about modern fintechs and the new components they bring potentially to security and data protection just are the new technologies that are available. I mean, this is one of the reasons Galileo works with AWS, right? Like, there are people who are dedicating entire engineering teams and organizations and jobs to creating more secure layers at every step of that way, from the cloud through the processing itself, through encryption to the more merchant and point of sale. So, like, advancements being made constantly here. To your point, if fintech needs to spend the time to say, well, how are we architecting our stack and taking into account all these components? But the good news is there's a lot more technology available now that does this for you. And this is one of the things we build into systems with clients for that reason. It's,
That's
you know,
right.
you can't have a 400-person team dedicated solely to security and be a nascent startup. You can use technologies that have a 400-person team dedicated to security, right? So it's how can you best leverage and use those technologies?
Terrific. This is a really interesting question. With the introduction of cryptocurrency trading and more mainstream digital wallet apps like Cash App, Venmo, and PayPal, do you expect to see this becoming a key capability for neo and traditional banks? Cryptocurrency trading.
I mean, I do. So the whole buy, sell, hold thing, you know, I mean, as I mentioned before, some of our traditional banks are asking, you know, for this capability, and we're going to help them achieve that, you know, be able to, you know, be able to do that. I do. I think, of course, we'll see what happens in terms of, you know, there are established, you know, crypto exchanges, you know, we work with many of them, where, you know, some people I think will choose to do their buy, sell, hold in that world and keep it separate. But as we were discussing during this whole, you know, webinar, there are some people that are going to want to kind of get that service from the same place that they're doing other things. And so I do expect, you know, there to be at least the consumer desire, you know, to be able to buy, sell, hold crypto on, you know, in some of these other non crypto first platforms.
Yeah, I agree, Sherri. I mean, I do think that, listen, crypto is not going away. There's going to be greater adoption here. I think the trading component is one thing. And I mean, that is a really interesting, unique area. I had previously spent a lot of time working with hedge funds who are using social and other data to make trade decisions. And I would just tell you the activity and conversation around crypto online is incredibly compelling. There are a lot of people very invested in the movement of crypto. Like you, I think what's more interesting is actually, well, how does that bleed into our normal day life, right? Like there's a whole community of people who are just thinking about valuation on crypto, fine. And those would be the Wall Street bet conversations and the kind of constant fluctuations that happen. And a lot of people feel strongly, which is great. And you want people who are invested in trading to do it. I think what gets really interesting is the points of, well, how does this impact our life? Like, where are you saving and storing money? Where are you spending money? And that's where crypto just is so unique in terms of a global and kind of uncontrolled currency. And it's interesting to think about where that takes us as people start to bring that into their day-to-day lives and to pay off mortgages in conversion from crypto and to save in one crypto versus another as they think about a long versus short-term bet. I mean, we just get to all the same decision matrices we've used for the last 100 years on USD now are being picked up and applied to a different currency. And I think that's fascinating.
That's true. And also, you know, there are just certain aspects of it. Like now many people all of a sudden know about NFTs and they want to buy one. Like right now, it's not really that easy to buy an NFT. And like sort of if consumer demand for that, you know, kind of capability continues, I mean, I know we're working on ways to make it much easier to do that, like to, you know, to not have to have a million hops and 25 different, you know, special purpose wallets and do conversions from, you know, from kind of one kind of crypto into something you've never heard of before. And then kind of hope for the best. And it takes 2 days. Many people on my team have tried it and it literally takes 2 days right now sometimes. Right. So I do think the more crypto specific functionality where consumers want that to be more mainstream, kind of the more accessible crypto is going to have to be. I don't necessarily think that everybody's going to want to go out and use Bitcoin to buy a latte tomorrow. Some people who have amassed a lot of it may want to, but other people are probably holding it, you know, for a speculative investment. And but as these kind of other utilities kind of grow out of it, there's going to definitely, I think, be a need for us in the ecosystem to make it easier for people to actually do those things that they want to do.
Yeah. Well, thank you so, so much, Sherri and Seth, for this great conversation and for taking us through the research. We received one last question, which asks about how lower fees and rewards are high motivations to change, but they both are lower consideration for consumer satisfaction. How do you explain the gap? And so instead of answering that question, we're going to invite everybody to our next webinar, which you can see is the date and time is posted on this slide. And invite everybody to join Simon Taylor, who's the co-founder of 11FS, and our Galileo CEO, Derek White, because they have new research and insight on that very question. Specifically, what are key drivers when consumers choose, switch, or consolidate financial providers? And what is the correlation between consumer behavior and financial provider satisfaction? And what banking features do consumers really, really want? And our next research webinar will provide some really great data and insights into those questions. And so I just want to thank everybody for joining us today. You'll all be sent a copy of the webinar, a recording of the webinar, as well as the slides. And we really, really appreciate you, Sherri and Seth, for taking us through the research.
Oh, I'm sure the other webinar is going to be great, but I will say I feel as though I got very lucky. I'm sure Simon's excellent, but getting to host with you, Sherri, is always a joy. So thank you. I could listen and learn from you all day. So thank you for the time you spent with us here.
Thank you so much, Seth, and the feeling's mutual.
And thank you, everybody, for joining us today.
Have a great day. Thank you.
Thanks.